Hello and good morning to our lecturer Professor Madya Dr. Logaswati and for those who are watching this video. So in this video we are going to present our group presentation assignment 2.2 for topic we have choose is loan syndication. Now I will present for the part background of loan syndication and then will be continue with my friends. First of all, my name is Saidatul Saadami Zaman, matrix number 258992. Why do we choose for loan syndication? One of the main reason is the need for the senior lenders to diversify their credit risk exposure. By inviting banks to participate, the seniors can avoid excessive exposure to a single borrower while still earning a fee for the origination expertise including contract design, pricing, and distribution services. That is, loan syndication is a way for the banks to solve an inherent tension between the benefits of specialization and the benefits of diversification. Furthermore, this topic is one of the happenings in all countries. It is timely and we know that we can get a lot of knowledge about this. Syndicated lending occurs when multiple lenders participate in making a single large loan. There is a lead lender, typically a commercial bank, in the syndication that originates the loan, and the other lenders participate by providing varying amount of the loan. In other words, it is a credit granted by a group of lenders, typically banks, to a borrower. Every lender has a separate claim on the borrower even though there is a single loan agreement. There is typically a group of originating banks that conduct the credit analysis prior to granting the loan and also negotiates the pricing structure of the loan. These originating banks, called the senior syndicate members, are appointed by the borrowers and provide the key financial intermediation services of reserving pre-contract information, asymmetries, and designing the loan contract. Generally speaking, with the exception of collateral requirement, most terms are uniform among lenders. Collateral activities are generally assigned to different assets of the borrowers for each lender. Usually, there is only one loan agreement for the entire syndicate. For example, business banks typically have cut-off points for the calculation of assets that they wish to concentrate on any one business undertaking. Sometimes these advanced cut-off points are not precisely the aggregate amount of funding an undertaking requiring to start an undertaking. By having different banks or money lenders sorted out to find the initiative, the required assets can be obtained while limiting the introduction of individual loan organizations. One way to figure out a group of banks or money lenders is to frame a loan syndicate that has different business loan foundation as individual. The loan syndicate will have business advance while distributing the risk and responsibility among the various individuals to reduce the impact of any risk associated with the enormous broad commercial loan. That's all from my part. I will pass to my friends. Thank you.
Hi, Assalamualaikum. I'm Nurul Fatini binti Ahmad. My matric number 259277. I'm going to continue the presentation, which is I would like to present about the current performance of the loan syndication. In Malaysia, recently Axiata Group Berhad has completed the first of its kind syndications multi-currency Sharia compliance sustainability linked financing facilities of 800 million US dollar. It is the first sustainability linked Islamic syndicated financing effort undertaken in Malaysia and globally. It demonstrates their approach toward a business operations and financing avenue to deliver long-term growth and sustainable performance. The statement from Axiata is the combinations of Islamic financing principle coupled with sustainability parameters and the multi-currency feature break new ground in the both local and international financing market. However, OCBC Al-Amin Bank Berhad was announced at the signing ceremony with Axiata, which act as a lead coordinator and sustainability structuring and Sharia advisor. Together with the other mandate lead arrangers and financiers, which is Overseas Chinese Banking Corporation Limited, Labuan Branch, Maybank Islamic Bank Berhad, and MUFG Bank Malaysia Berhad. The successful financial close of the syndicate financing demonstrate the strong support and confidence of the banking fraternity toward Axiata's long-term business sustainability and direction, which is one of the most successful government-linked companies back its well-established regional presence in 11 markets throughout ASEAN and South Asia. The OCBC Group has been one of the main advocates of green and sustainable financing in the regions and has been able to leverage on Malaysia's leading Islamic capabilities by embedding the sustainability link feature in lines with Axiata's sustainability framework, which is consistent with the United Nations Sustainable Development Goals. It's to ensure an optimal financing package for Axiata. And in US syndicated loans market, there's the syndication loan in recessionary environment that has grown significantly since the GFC, which is global financial crisis. Alright, that's all from me. Thank you.
A very good day to Dr. Lakaswati. My name is Karjan Abdullah and my matric number is 258991. So, I'll be presenting about the risk of syndicated loan. Credit risk is the first risk in syndicated loan. The credit risk is a risk that will be incurred by the authorized lending institutions in conjunction with a syndicated transaction. Even though lender might well have creditworthiness, which is usually only the greater the creditworthiness of the lender has the access towards the syndicated loan market. The implicit credit risk appear to rise as the loan tenor is longer obligation and the overall credit size of the lender is comparatively large. Despite the extent of the participation, the syndicated members who are the lenders should not solely depend on the authorized institutional credit prepared by the arranger. Next is in terms of market risk. The level of market risk in syndicated loan relies on the level of involvement of authorized institutions that is in the deal. Given that majority syndicated loans are priced on a floating rate basis, whereby market spreads will be wide and the period between the underwriting and the completion of the syndication typically is relatively short and thus the extent of the risk is limited. Syndicated loans are also exposed to interest rate risk. Depending on how well the deal being priced and funded, interest rate risk can be in different degree. It will be incurred by authorized institutions that have provided binding legal documentations on lending commitments. Although authorized institutions are using floating rate money to fund floating rate loans, they do have to limit the extent with which they face a basic risk if their lending and funding are not really priced at the same price index. Next is liquidity risk. Liquidity risk is also the risk that syndicated loan need to face. Authorized institutions may reduce their exposure to syndicated loan and help manage their liquidity positions in the secondary market by subsequent loan purchases. So, in order to encourage this, authorized institutions must ensure that documentation contains provisions on transferability, which enable them to delegate their rights through such sales. Next is in terms of operational risk. The lenders incur operating risk in the syndicated loan and it also affects the agent because the latter is responsible for dealing with some aspects of credit administration. Mistakes due to monitoring or incompetence, such as providing syndicated members with timely advice, scheduling drawdowns or refixing interest rates, or carrying the interest as well as principal payments to syndicated members will costly to both terms of monetary compensation and also reputation. Next is legal risk. Once the documentation has been signed, legal risk is incurred by underwriters, lenders, and also the agent. Given the scale, the term, the complexity of syndicated loan, legal agreements with multiple parties involved need to be as watertight as possible. Experienced employees of the arranger should collaborate closely with legal counsel to ensure that lenders' interests are adequately protected. Every relevant documentation should be distributed before such documentation is signed to syndicated members for review and also comment. Next is in terms of reputation risk. If there are problems with a high-profile deal encounter, it is primarily the credibility of the arranger for the deal that suffers. However, it may also affect the reputation of regular syndicated members. The syndicated loan appears to have a greater media image and it is more difficult to monitor its knowledge flow as there are several lenders. Last but not least is the strategic risk. Authorized organizations should determine whether the projected extent with their participation in syndicated loan is compatible with the organization's overall strategic goals and whether the resources are requisite to achieve the target sets for the activity. Thank you.
Hi everyone, my name is Nurisha Tasha binti Kasim. My matric number is 258959. Today, I would like to present on the future directions of loan syndication. So, what is loan syndication? Loan syndication refers to a process involving a groups of banks that jointly lend their money to a single borrower. There are several challenges faced by the financial institution when they implement loan syndication, which are: first, lack of standardization. The loan agreements are naturally not standardized. Each loan is tailored according to their condition. Second, loan settlement cycle. This syndicated loan process is involving in many paper-based, antiquated, and manual. So, it will result in longer settlement cycle, elevated counterparty risk, lower liquidity, and high settlement costs. The third one is dependency on data provider. The reconciliations of status of the loan is essential for timely interest payment, but several lenders and intermediaries make this procedure more complicated. Lenders and agents currently must rely on the independency data provider to collect loan status detail for reconciliation. Due to this problem, financial institutions started to introduce DLT or distributed ledger technologies and smart contract in their own syndicated loan. DLT is used to keep data, making the transaction safely and the automated process in the context of many different financial contracts and service. It includes loan, trade finance, and derivative. Smart contract is a digital contract incorporated with a computer code that automated their execution based on the predetermined event. Okay, in the future syndicate loan, smart contract will automatically form syndicate, verify financial information, and carry out settlement service, which will reduce the time fund a borrower loan. DTL and smart contract will eliminate the needs of third-party intermediaries. Diligence system will communicate pertinent financial information directly to underwriting system. Regulators will have a real-time view of financial detail through the syndication loan life cycle. Operational risk will decline as DLT automatically dispose fine principals and interest payment. In a nutshell, banks and financial institutions believe that smart contract and DTL give a good impact to a loan process, include cost reduction, easing friction between parties, protected transaction record, and improved decision making. So that's all for me. Thank you.
Hi, my name is Nurata binti Muhammad Zaid. My matric number is 258971. So today I would like to discuss about how the syndicate loan affected by the COVID-19 pandemics. So I will also present about what the government directions toward the banks and what banks do to help the government, and also what bank can do and cannot do during the pandemics. So the syndicate loan in Europe is totally decreased when the US 144 billion in the first 3 months in 2020 is lowest volume recorded for any quarter for a decade. So as many borrowers are leave because of the pandemic, so the economy is not stable, and it's recorded 40% lower in the first quarter than the US last year, 239 billion. So what government direction towards banks is government announced about the moratoriums loan repayments. So after the Prime Minister of Malaysia, Tan Sri Muhyiddin Yassin, said the move of the is burden faced by the small media enterprise (SME), so they give the moratorium to the all the people in Malaysia. So BNM also help the government by announce the SSR, which is statutory reserve requirements, and it will be lowered by 100 basis point from 3% to 2% effective to 20 March 2020. So the overnight OPR is the sole indicator used significant stand of the monetary policy. So and the monetary policy statement released after the monetary policy commitment meeting. What bank have to do during this pandemic? So I see that during this pandemic, bank have to manage their credit portfolio very well, and also the credit risk. So to make sure the bank are running very well during this pandemic. So what I can see is Axiata Group Sdn Bhd has completed the first syndicate multi-currency Sharia compliance and stability linked to financial facilities of US 800 million syndicate financing. So it is first sustainability linked Islamic syndicate financing effort undertaken in Malaysia and globally. So as such, Axiata will benefit from a lower financing cost and should be continue to exceed a straightened criteria to the company. He said for it's under the set framework. That's all for me. I will pass to my partner. Bye.
Hi, my name is Dr. Binti Kamarudin, number matric 258996. The administrative control or regulation devised by the regulator, BNM, have limited the overnight policy rate, which known as OPR, at 3 consecutive MPC, which is on 3 March, 5 May, and 7 July. Including the January rate shift, the OPR has been lowered to 1.75% in 2020 by a combined 125 BPS to date. Initially, the policy response was aimed at resolving market instability and financial market uncertainty in March, and more recently to respond to poor global economic conditions and mute inflationary pressure. Other than that, BNM report that until May 2021, banking institutions will use MGS and MGII to completely comply with the SRR compliance. The potential danger posed by banks during the epidemic has had a range of implications for the practical effect of limitation on travel and in-office operating on the mainland and elsewhere. The first is the temporary closure of the borrower office. Other than that, many people operate remotely or from home. In addition, travel constraints are enforced that make face-to-face meeting and visit to the site impossible. Next, disclosure is local regulator is limit, and the borrower and his auditor access to financial statement is deferred. Banks are facing an increasing conflict between serving their customer and heightened worries about the growth in non-performing loan (NPL), which could contribute to capital erosion as a potential danger posed by banks since the COVID-19 outbreak. Recently, three major U.S. banks announced that in 2020 they set aside a total of 25 billion in credit loss reserve, while concert action with policymakers and regulator is likely to be needed to resolve the immediate NPL overhang. It is expected that the consequence for firms and individuals would be longer term. Nearly a quarter of respondents say it will take years to recover the degree of financial protection they had before the recession. The EY Future Market Index reveals. This points to the problem that many corporations will face with customers saying it will be years before going to sporting event, the cinema, or traveling will feel relaxed. The way customers react to this evolving situation will be closely proportional to global economic growth, with some countries increasingly opening up while others contending with new outbreaks. It is impossible to see past the imminent danger and continuing the consequence of the COVID-19 pandemic. Banks too need to be continued to play an important role in shaping the recovery and helping their clients restore their financial stability and business well-being. This would enable banks to refocus on better knowing the needs of their client and in parallel adjusting their operational model to ensure the right measure of performance and stability to help them deal with the recovery. Looking forward, there are three areas of emphasis that will reshape the market and facilitate a faster recovery by better providing consumers with dynamic and appropriate goods and services across the right channel, adjusting the modern way of working, and creating more robust and flexible organization.
Assalamualaikum warahmatullahi wabarakatuh. My name is Hazika binti Mama Arifin. My matric number is 259107. So, my groupmate has explained about the background of this syndication loan, its current performance, the risks when you entered this syndication loan, and its future performance, and how the syndication loan affected by the COVID-19 pandemic. And for this group project 2.2, I will conclude about this product. So, when a bank lends a large amount of money to the single borrower or to the corporation, this bank will expose to the some type of risk. However, this bank can mitigate all the risks by using loan syndication, which it can divide the funding into various portions of loan to the other multiple banks. As mentioned in the background of syndication loan, one bank will lead and act as a syndicate manager or supervisor and providing all information to other banks involved in the syndication. In simple words, a few bankers join together to give a loan of big amount to a borrower on the same terms and conditions. However, when the banks entered the syndication loan, the bank will expose to various types of risks such as market risks, credit risks, liquidity risks, interest rate risks, operational risks, legal risks, reputational risks, and strategic risks. Hence, a corporate risk manager needs to monitor the relationship between the lending parties and the loan recipient in order to avoid misunderstanding and to implement contractual obligations. Regardless of many risk exposure, most of the banks want to involve in this loan syndication because of its advantage. For example, for the small bank, it is a good chance for them to create a new networking and they can diversify their customer base. Second advantage is the lender can spread all the risk to the other banks and they can obtain the good return on the loan. And it is providing the lead bank with off-balance sheet income for the portion of the loan that sold to the other participants. Next, the advantage of this syndication loan is the participating bank can increase their income by receiving the fee income. Last but not least, the advantage of this syndication loan will help enhance the relationship with the foreign government by financing their domestic economic activity. So, what can I conclude is, this syndication loan gives benefit to the bank as a borrower and benefit to the lender as well. So, that's all for our presentation. Thank you very much, Doctor.